finance fees, and then there is an operating lease.
There are internal auditors everywhere, then how did that Vijay Mallya fraud even happen?
Gross profit will give me the sales.
Are internal auditors as independent as external auditors?
Having understood what is a non-current asset, let's shift our focus to tangible non-current assets and the accounting standard which deals with that, which is IAS 16 property, plant and equipment. Now, having understood what is a non-current asset, it is very essential for you to know what constitutes property, plant and equipment. The board that I am using to teach you right now is my equipment. If I were standing inside a factory and I would see machine or machinery all around me, that would go under the plant part. And I hope you are aware that I am standing inside a building, not in the middle of the road. I am standing in a building. That building comes under property. So basically, any asset that is used in the business to generate income comes under this particular standard. Which means if this blackboard and this pen is ultimately helping me produce a video which I will sell to someone else, it is being used in the business to generate income. This falls under the category of property, plant and equipment. Sometimes assets which are given on rent to others are also classified under property, plant and equipment. There is another standard that we are going to study later called investment property, which talks about giving asset on rental to others. This is a special case, and when we look at IAS 40 and IAS 16 together, you will appreciate the difference between the two. And the last one, used in day-to-day operations. Now, if you were to enter our office, you would see there is a furniture outside. That furniture does not directly contribute to the generation of income. Well, I agree that prospective customers come and sit there. They would want to know something, and you could link everything to the idea of generating revenue. But if you really think about it, this camera, this equipment directly contributes to the generation of cash. On the other hand, the furniture outside, the water cooler here are not contributing to generation of income or cash, but they are being used in my day-to-day operations. And as we discussed already, they are intended to be held for more than 12 months from the reporting date. They also come under the category of property, plant and equipment. I hope all of you are with me in terms of how do you tabulate the entire definition of PPE. Having understood that, let's get to the main crux, and I think all of you have been waiting. Ki sir, accounting entry to batao. Tell us what the accounting entry is. But to get to that, let's look at the first element, which is recognition. Recognition answers the question when. Now, when do you think should you record an entry for purchase of a non-current asset? Let's look at the entry first. My entry would be non-current asset debit to cash. If I have purchased it on credit, non-current asset account debit to supplier account. The question is, when do I record this accounting entry? There are two conditions that need to be fulfilled at the same time. The second condition is something that you will find across all accounting standards, period. The first of which is, it is probable economic benefits will flow to the entity. Now, when we talk to each other, I think we use the word probable with complete abandon. We use the word probable, probability without attaching any importance to it. But when it comes to financial reporting, the word probable has a lot of significance. When I use the term probable, what I mean to say is that the chance of happening is more than the chance of not happening. Which means if I have purchased this particular board and I'm making videos and selling these videos, there is a high probability, there's a more than 50% chance that economic benefits will flow to the entity. I bring in a new projector, I bring in a new machine, and the market suddenly has a different viewpoint now. Nobody wants to attend an online pen drive class. Everyone wants to come to an offline location. I'm using this board. I'm making videos using this board. But is there a high chance that economic benefits will flow to me? No. Why? Because nobody wants to come to an online recorded class. Everyone wants an offline class. So probability of collection is very low. That might be the case. And the second point is cost can be measured, or amount can be measured reliably. Okay. So, and there is an and here. Please be mindful. It's not this or this. It is first condition. It is probable that economic benefits will flow to the entity, and at the same time, the cost can be reliably measured. If the cost cannot be reliably measured, what will you record? You cannot simply write non-current asset to cash. You have to mention an amount here. 100 rupees, 1000 rupees, 1 lakh rupees, something has to come. And unless you cannot measure it reliably, you cannot record the accounting entry. It is only when both the conditions are fulfilled, probable that economic benefits will flow, which means there is a greater chance of you getting the benefit than not getting, and you can measure the amount reliably. Will you recognize the non-current asset in your books of accounts? You might ask me, sir, what if I have paid the amount to the supplier, but one of these conditions is not fulfilled? The asset is lying in my warehouse or it is lying next to me. It is there with me. Should I still record the entry? The answer is no. You cannot record non-current asset to cash unless both these conditions are fulfilled. Okay. The follow-on question to that can be, but what happens if the conditions are not fulfilled and, as I said, the asset is lying with me? There is a different accounting treatment for that. We'll discuss that part in a minute. Assuming that all of you have understood these two elements that are necessary for the recognition part, let's move on to the next one, wherein we understand the value at which this particular transaction has to be recorded. Which brings me to the next part, which is measurement. This part talks about the amount. We discussed the entry, non-current asset to cash. But what do you write in front of that in the debit column and in the credit column? I hope you recall what a journal or a book of primary entry looks like. What value are you supposed to record? Now, there are two parts whenever you discuss measurement. Okay, first is initial recognition. First time you get something, at what value do you record? And later, maybe after 1 year has gone by and you are at the next balance sheet date, what is the value at which it should be shown? That is subsequent measurement. So, the first one is initial recognition and measurement. The second part, which we will touch upon soon, is subsequent measurement. Okay. Now, initial, that is first time recognition. This beautiful camera which is shooting me right now, the day I purchase it, at what value do I record? Now, accounting standard IAS 16 is very clear that initial recognition and measurement has to be at cost. We'll come to the subsequent part later. Now, I'm sure people who are thinking about PPE or listening to PPE for the first time might come to me and say, why do you need an accounting standard to tell us something which is so basic? Yes, we have to record it at cost, but let's understand, does the word cost mean how you and I think about it, or there are other elements or other items which have to be included in this cost? Okay. Now, let's think about, I badly need a washing machine because every weekend I have to spend in, at least 1 hour washing these clothes. So, I want to buy a washing machine. I go to a Vijay Sales Ka store and I single out the machine that I like. It's for 20,000. I swipe my card. That is the purchase cost of that item. Okay. So, that purchase price which I paid has to be a part of cost, no two ways about it. But I don't own a four-wheeler, and even if I do, there is no way I can bring that washing machine in my four-wheeler to my home. So what I have to do is I have to tell the Vijay sales guy that, listen bro, I cannot bring it home. Why don't you send it? Why don't you put it in a tempo or something? And why don't you deliver it to my place? I stay on the 7th floor and it's, putting it in the lift and bringing it up is a problem. So some human being ultimately will have to lift it and bring it to the 7th floor. Now, these are not my relatives, or even if they were not going to do it for free for me in any way, which means for delivering the material to my house, they are going to charge something. And even when they bring it and put it nicely in my house, I don't know the first thing about any device, forget a washing machine. I mean, I can barely operate my iPhone. I can operate 3 features probably in it. So, machine is completely beyond my ken. So, I have to request someone to come to my place, and by the way, I am teaching you PPE. He has to teach me another PPE, how to operate that machine. He will come and he will do that entire demo for me. Okay. And naturally, he is not going to do it for free. So there is going to be a charge. Maybe he has to make some change to the electric board and some switch, wire, whatever it is that entails. I will have to pay him for that as well. Okay. So what did we talk about? We spoke about delivery. We spoke about installation. We also spoke about a trial run, right? And do you agree with me when I say that unless 1, 2 and 3, delivery, installation and trial run are done, I cannot use it. Even if it is lying there in my house, beautifully gift wrapped, there is no way I can use it. So, to bring the asset to its current location and working condition, I have to incur delivery charges, I have to incur installation charges, and I have to get the trial run done. Unless I incur all these costs, there is no way that property, plant and equipment, in this case the washing machine, will be of any use in any way. So, all these charges which are incurred to bring the asset to its current location and working condition ideally should be included in the cost of that asset, which means if the purchase price was some 20,000 and I incurred a combined amount of 1,500 for delivery, installation and trial run, what is the amount at which this non-current asset should be recorded in the financial statements? Not 20k, but at a total of 21.5k. We looked at 3 examples, right? Delivery, installation and trial run. Now, these are 3 examples. Are these the only costs which have to be capitalized? No. There could be more, which is why you need to understand the principle which governs all 3 of them. And what is that principle? It says any cost incurred to bring the asset to its current location, which is my house by the way, and working condition has to be capitalized. What do I mean by the word capitalized? It has to be included in the cost of that asset and not expensed off to P&L. ठीक है. Any cost incurred to bring the asset to its current location and working condition. The washing machine was brought to my house, but unless you connect the wiring, unless you teach me how to use it, it does not serve any purpose. So which is why this working condition wala point is very important. ठीक है. So we have discussed what all is included or what all should be included in the cost while recording the initial transaction.